2007.
So it'd be 16 years because I was 7.
16 years.
16.
Oh, well.
2027 would have been 10 years, so it's 2034. I think I was going
2034?
No, I was saying because I'm 34, so I was thinking, all right, 2007.
I also have a certification to teach math.
She's really good at insurance.
And I'm really good at real estate. That's why I do it. I can just use a calculator.
Exactly.
So it's fine.
Okay, so what did we decide? 16 years? Is that the right number?
16 years, yeah.
Okay. I'm just going to do it on my
How
calculator.
many people does
2023 minus 2007.
16.
Wow, okay. Good thing none of us really need to use math.
Math is hard.
Math is hard.
It's not mathing, that's for sure. Well, guys, welcome back. We are on episode 5 of Real Talk, Real Life, Real Estate. And we have our friend Ashley here today from Sunrise Insurance Group. And she's going to be talking a little bit about the insurance crisis in Florida. And just, she has a whole thing she would like to, just inform us about and what to expect. So. And again, my name is Gibby Eagle. I am a native to Southwest Florida. I work for Maxim Realtors. And you can contact us. We'll put all of our contact info below if you're looking on YouTube. Otherwise, of course, you can reach us at realtalkrealliferealestate@gmail.com. And Ashley will be sure to give you her information as well. So you can reach out if you have insurance questions or need to bind insurance. So.
Yeah, cool. And I'm Alexandra King with NRL Mortgage, your local lender here in Coconut Point. As Gibby said, you'll have all of our contact information below, but we're going to turn it over to Ash and pick her brain, let her, have her talk a little bit about herself, who she is, what she does. And I might be biased, but I think she's the best insurance agent in Southwest Florida. I send all of my people to her. They absolutely love her. So take it away, my friend.
Well, thank you guys for having me. I'm excited to be a part of your guys' awesome podcast. So my name's Ashley Matita, and I am the owner and principal agent at Sunrise Insurance. I've lived in Southwest Florida for about 16 years.
Roughly.
Depending on who's doing the math. And my office is located in Bonita Springs. We serve mostly Southwest Florida, but the whole state of Florida as well. Property and casualty, homeowners, auto, flood, commercial. Yeah, we do it all.
And when people, if they were to bundle with you guys, are you able to offer discounts that way? People do home, auto, or stuff like that?
Yeah, so there are certain carriers that you can bundle with, but one of the things that people don't realize coming from up north is that most home insurance carriers in Florida don't write auto insurance, and most auto insurance carriers don't write home insurance.
Oh, I didn't know that.
Yeah, so the big national carriers that typically do both in other states, they don't do that here in Florida.
Oh, good to know.
Is it because we're such good drivers?
It's mostly they don't want to take on both risks.
Florida,
You're like,
we're choosing one, that's it.
Hurricanes and bad driving.
Right.
Which one?
But certainly we're an independent agent, so that way we write with several different carriers on both home and auto, so that way we can get you the best rate, and then you have all of your policies in one place to be serviced. You only have one phone number to call.
And I think that's what's important too for people to realize. People, when I see them, shopping insurance, they don't realize you can go to an independent agent. They're considered like a insurance broker,
right?
So you can shop different carriers to find the best policies. Like if you're going to State Farm or Allstate, like you're solely getting their quotes. So
correct.
Same with mortgage brokers. You go to a mortgage broker, they can shop different lenders. So
exactly, yes.
And I think a lot of people don't realize that of what the difference between a a lender and a broker is.
Yeah.
Insurance, an independent insurance agent or a
captive. Yeah, they're called captive. So State Farm is considered a captive market. So as an independent, we write with several different carriers, but because State Farm is considered captive, that's one that we can't write with. Yeah. But then it goes the same for State Farm. State Farm, since they are captive, that's the only thing they can offer you. So they're not getting access to the rest of the market, which then limits the type of policy you can get or the premium rates. So it's always good to not that State Farm isn't a great option for some people, but if you want to get a scope of the whole market, it's best to work with an independent.
I agree with that too. Yeah. So, and we brought Ashley on. I know our last podcast, we kind of dipped into a little bit about insurance, but we didn't want to voice on it too much because, like, that's not our niche. That's not what we are, versed in. So we thought it was important for Ashley to come on and, just kind of explain what is going on right now in the state of Florida and Southwest Florida, especially, because I feel like so many people are dealing with insurance issues since Ian. It started really before that. I mean, especially when the Flood 2.0 came out, but I feel like since Ian, it's gotten much worse. So, I think it's important, for you to, be able to voice on all of that.
Yeah, I think that the challenge in the insurance market started actually long before Ian, and it really started, especially in Southwest Florida, after Irma.
Okay.
And then it kind of spread across the state. What was happening is there was a lot of fraudulent roof claims that were coming in. So as soon as we had Irma, you had roofing companies coming in from all different types of states, and they were setting up shop here, and they were knocking on people's doors, and they figured out how to take advantage of the insurance carriers. And so they would knock on people's doors, they would have people sign their rights over. It's called an assignment of benefits, which is now illegal to do.
Good.
So that's something that has recently passed. So there are legislative changes that have been happening that are positioning the insurance market to recover, and for us to see kind of light at the end of the tunnel, which is great news. But that's why we're in the challenging market, is these fraudulent roof claims that then get taken to court, and then the attorney is getting a multiplier fee. So what would normally be paid out as a $50,000 claim turns into a $500,000 claim, and that was just happening over and over again. And so as far as the premium and the rates, that's really what was the driving force, is that these insurance carriers, they were being taken advantage of and having to pay out way more than
leaving them dry.
Exactly. And I get sometimes that insurance carriers get bad reps, and people think, oh, it's all about the money, but at the end of the day, for them to function, they are a business.
It's not affordable,
right?
They
not sustainable.
They to survive, they have to make money. They can't be losing money every month or every year and then being able to pay out claims. So with that, what people don't understand is that insurance carriers actually have insurance for themselves, and it's called reinsurance. And so as these things were happening, the reinsurance market was becoming smaller because the risk was too high in Florida because of all the fraud that was happening. So they pull out, there's not as much reinsurance available for the carriers, or the rates are so expensive that then they are forced to raise the premiums. So it's been this snowball effect that's been happening over the last several years.
Yeah, and too, it's like, I like you said, them knocking on people's doors. It's like almost they'll climb up on the roof to find something wrong,
right?
And then say, "Oh, so you had a storm when and what?" And then they use that as a date of like, "Oh, this is when the wind damage happened." And I'm actually dealing with that, like, because I called Ashley to run some a policy for me, and I wasn't thinking, but I still have a claim out from Hurricane Ian, and I had UPC. They have obviously left Florida. And anyways, they offered me $1,000 for my claim. I'm like, I need a new roof. My fence is down. Like $1,000 is not even half of it. So, anyways, I hired a public adjuster. Not really understand or private. I get
public,
this public. Okay, so I hired a public adjuster just because of the roof. And then they come out, and the thing that they wrote up was wanting over $200,000 from my insurance company. I'm like, I don't want that. I just want a roof. Like, that is the other stuff. Like, you're almost finding things wrong. Oh, the seals in the windows or this or that. I'm like, I don't care about that. Like, I just want a roof so I can get insurance, So it's almost like I'm ready to I have to look into it, what my rights are as far as just pulling it from the adjuster. But I'm like, I'd rather at this point pay my roof out of pocket because my insurance went up $5,000 a year.
Yeah.
So it's like thinking of that, a waste of $5,000, or just use that $5,000, towards half of my roof, So it's crazy. So.
And it does. And at the end of the day, your insurance should pay out for a legitimate claim. You have roof damage, you have fence damage. your insurance company should be stepping up to the plate and paying that out. So it's unfortunate that there are cases where that does happen. And then you feel like, yes, now I do have to go get a public adjuster. And then that person takes it too far.
Oh,
and
then
you
like, and then I just want $12,000.
And then you feel like, well, now I don't know what to do because I'm trying to do what's right integrity wise. I have been paying for my insurance, and I do I should be receiving compensation to repair my home based on this is what insurance is for, but also I'm not trying to take advantage of. And it's just been this tension that I feel like people have been living in the insurance market of not knowing what's the right thing to do.
And like if my insurance company were to pay that out, obviously I go to reshop, they're going to see that claim on there and be like, oh,
she's a risk.
You know, is that true? Like if they see that amount of money paid out?
So it's not necessarily the amount of money when it comes to a hurricane or what's considered like an act of God claim or something you can't control. It's not necessarily the amount. A lot of things that carriers are looking at now are how quickly did you file the claim after the event happened. So, you know, like we talked about with Irma, the roofers knocking on the door, and people were filing Irma claims 3 years later.
Oh God.
Oh my
gosh. You know, so and so now carriers are looking at, oh, okay, you had an Irma claim, but when did you file it? Oh, you filed it 3 years later. We don't.
Well, obviously didn't need it that badly.
Right. We're not gonna, you know, that's not a risk that we want to take on, or a person say that we want to take on. So they're going to look at, you know, okay, she filed it right after Ian. And then some carriers are looking at, you know, not necessarily a public adjuster, but did you then file a lawsuit and go to court for the carrier?
I had a question. Is that another option? So, like, obviously she's not getting paid out what she should be. She hired a public adjuster. If she didn't want to go the public adjuster route, what can you do to try to make your insurance company pay out? Or when they tell you they're going to give you $1,000, that's it?
Yeah, so, you know, I've had a lot of clients that, you know, they filed the claim and they needed a new roof, and the insurance carrier said, you know, no, it's just a repair. And so then we advise our clients, hey, what we would do is go and get 2 or 3 roofing companies that are trusted, and get them to come out and give you a report on what they feel. Does it need a repair or does it need a replacement? And if it does need a replacement, have them write out, you know, the cost to replace, and also that based on the roof damage, it's damaged more than 25% or whatever the material, you know, you can't find the same material. And let's resubmit that to the insurance carrier and have them reopen the claim, or do, you know, reevaluate the claim. And actually we've had a lot of success with that, with people that have said, hey, you know what, I've gotten 3 different roofers out here, and these are their 3 different estimates, and these are their 3 different reports that all state X, Y, and Z needs to be repaired. And they've submitted that, and the insurance company has come back and said, you know what, you're right, and we're going to pay out to have the roof replaced.
Because like UPC, they were acquired by Sling, so I guess I could try to approach Sling. I mean, if they've taken me on as a client, you know.
So it's still that claim is still, so for anybody that was with a carrier that, you know, ended up going, you know, leaving the state or going bankrupt, or their claim, whenever the claim was filed, it's now with the state of Florida with FIGA.
Okay.
So you're going to deal with an adjuster at the state of Florida, which they should have sent you a letter.
So when you told me about that, and that's funny because my adjuster, I told him that, and he said, no, we're going to go after Sling now.
Well, I think you're with Slide now.
Slide. Why do I keep saying Sling? Have I said that multiple times? Slide.
I actually like that name.
Yeah. So you actually,
let's call it Sling.
Yeah. So you actually can't, because they were not your carrier when the storm happened.
Okay.
So they would have 0 financial responsibility for that. So the state of Florida is still handling all of the UPC claims, and And I think I told you should have received a letter that had your new adjuster on it, and if not, you can call them and they'll tell you who your new adjuster is.
Probably wouldn't. Really bad about snail mail. It's probably in the trash
can.
But I actually did call after you told me that because I didn't know what to do, and they said there wasn't anything on file for me, so I'll have to probably follow up.
You'll have to follow up with say your claim number, because UPC may have closed your claim prior to it getting to the state of Florida, and so you'll have to reopen with.
Got it. All right. Well, that's interesting. I feel like so many people don't understand the insurance.
And they
people
give
get
up
terrified. It's just
it's hard.
Like when I had a plumbing leak at my house, like my insurance company almost scared me into not filing a claim because they're like, if you do this, and it's like, but I need to. What do you want me to do?
A lot of damage.
So it's like people get worried, like I don't want to utilize it because if I do, it's going to affect my policy or my premium or shopping. So it's important, I think, for you, just to talk to you and you to kind of,
there are certain types of claims that certainly are make it more difficult to shop your insurance once you have one. So a water damage claim, for example, a lot of carriers will only take one water damage claim in the last 3 years, and then some of them say, and it can't be over $10,000. There's some carriers that say we don't take any water damage claims in the last 5 years. So there are things that can hinder and limit, if you wanted to reshop your insurance down the road based on that. But I always tell my clients, you have insurance for a reason. If you have a legitimate claim, then you can file the claim. Now, if you have a water damage claim or a claim that your deductible is $2,500 and to repair everything is $2,000, maybe that doesn't make sense to have that water damage claim on your policy for something that wouldn't necessarily pay out anyway.
Yeah, that makes sense.
So, it's evaluating those kinds of things, but certainly you have a major water damage claim. I mean, there's no reason why, you shouldn't be able to utilize your insurance for something like that.
Yeah, absolutely. Yeah.
Speaking of water, we should segue into the wonderful flood insurance that everyone's been talking about. Obviously, I mean, from a lending perspective and from real estate, we were talking about this on the last podcast, how Gibby does her due diligence upfront to let her borrowers know, hey, these houses that you like are in flood zones. Let's work on getting quotes up front while we're still in the inspection period, because it's important for you to know what you're actually purchasing and how much it's going to be monthly. And I was speaking to Ashley, and she had some really great information that I think we all should actually know when purchasing a home regarding flood, and even if you are being grandfathered into a policy, which we did talk about last time, but there's an additional thing that you should know. So, it's like an infomercial.
Yes, I love that. I think this new Flood 2.0 has really changed the landscape of insurance, especially here in Southwest Florida. So for those of you that don't know, in October of 2021, we switched over to FEMA 2.0. It's the first time that FEMA's changed their rating system in a very long time. So the way it works is, regardless of flood zone, your flood insurance rate with FEMA is going to be specific to your property rather than the flood zone and your elevation. Now, your elevation can, if it's higher, can certainly help you, but you're now being rated specifically on your property versus, a general area or flood zone. So that's changed premiums pretty significantly. So what was, say, maybe $600 a year in flood insurance is now maybe more like $2,500, or in some cases, for new construction homes in Cape Coral, I've seen what was, say, $1,000 is now $8,000. So there can be a wide range when it comes to flood insurance. And I know you guys talked about, grandfathering and what that means. So property owners that had flood insurance in place prior to October of 2021, they have the old FEMA rates. And those can be essentially gifted or grandfathered to somebody that's buying the home now, as long as it's a FEMA policy. So private flood policies wouldn't apply. And what that means is you can take over, there's two ways you can do it. You can take over somebody's existing policy. So even if they're in the middle of their policy term, they can sign over their rights to that policy, or that policy over to you. That's one way that you can do it. The other way is you actually don't have to do that at all, which people don't, and a lot of realtors don't realize that, is as an insurance agent, we just need a copy of the current policy, and we use the carrier, the policy number, and the dates, and we can write a brand new policy for the new buyers, 12-month policy, same rates.
Oh, no way.
Yeah, and so I think people, and there's no signatures needed from the seller and the lender, and there's not any back and forth. And so a lot of people don't realize that. And the best thing about that is, one, your buyer gets a 12-month policy, and the lender likes that better than one that only has, it likes it better than one that only has 3 months left, and you're looking for the renewal, which may or may not have generated, and that creates a whole another problem with lending. And the other advantage is that your seller gets to get a refund for what's left on their flood policy. They don't have to either work that out with the buyer at closing, or they have to just give it up. So those are the two advantages of that, and it's I feel like it's better because it's nice and clean and easy, and there's less changing of hands, if that makes sense.
So you just have to acquire the seller's policy with the
you just have to send us the deck page.
Insurance agent.
Yep, and then we use that information to and FEMA pulls that information from there. So one of the things I was telling Alex about, though, that people I think are unaware of, is that even though you may be able to get the grandfathered policy, so I own a home and I have a flood policy and it's $1,200, and I'm able to gift that rate to the new buyers. That's great and all, except for I think people are not understanding that even though that rate is at $1,200, if FEMA has what's called the full risk premium, so that would be like if the sellers didn't have a policy and I just showed up and I wanted to buy that house and get new flood insurance, what is the new rate, the new 2.0 rate that FEMA wants that house to pay for flood? It's called the full risk premium. Well, that full risk premium may be $6,000, $7,000, and this $1,200 that they're paying now is going to increase 18% every year until it reaches the full risk premium. So people don't realize that that rate that they have today is not going to stay that rate just because they had the policy in place prior to 2021. It eventually will get to the rate that FEMA wants it to get to, and it increases 18% a year. So if you get a policy that's
quit.
No, I'm like, what is my policy?
Should we flip the table?
So
much I didn't know.
Yeah, so the 18% is the cap. That's the maximum right now by law that the policy can increase for flood with FEMA. So if your rate is, say, $500, 18% isn't that much today, right? Or next year. But 5-10 years from now, when it's $3,000 and then 18% starts to pick up steam pretty quickly. So what we've been advising people and realtors and lenders is, hey, what's right by the client is to let them know what that full risk premium is going to be. And they need to make a decision. Am I okay with that down the road? Because not only does the buyer have to be okay with it down the road to pay it themselves, but that could be a hindrance in selling the property 10 years from now if the flood insurance is $7,000. So you can find out that information on, it's usually listed on the flood declarations page from the seller. It's usually listed and it says full risk premium, and it will show you what that rate is. The other way you can find out is you can just ask an agent, can you run this flood quote as if it's just it never had flood insurance,
Okay.
and that will tell us the full risk premium.
And is that for just if, cause like me, I'm not in a flood zone, but I have flood insurance. So obviously that may not pertain to me.
Yours will actually continue to increase as well until they get to the full risk premium, whatever that may be. Yours is probably lower because you're in a preferred zone.
I paid just under 1,000. It started at 600 something. I think it's
so crazy.
Yeah.
I know. I made houses in from the river.
Yeah.
Like that's
and it cuts off like right at my house.
Yeah.
But like during Ian, you could just see the water. It would just run down the sidewalk back to the river. Like you could just tell that it's kind of.
Yeah, it was built in a certain way.
Yeah.
That's
cool.
cool.
That's
wow.
Yeah,
I know. That's why I was like, we have to talk about it.
But that assumption thing too, like that's really cool because I didn't know that. You know, especially too because if the buyer really doesn't, you know, sometimes people want a connection with their agent or, you know, just taking over the seller's policy. It's like, great. Like I don't even have an option on who I get to have as my, you know, like a representative or whatever.
Yeah, exactly. And then you have people say, oh, well, I have my flood insurance over here and I have my home insurance over here. And it's people want it to be in the same, you know, say agency or housed in the same place so they can service it, you know, call one place. And so that's one way that we help our clients do that is, hey, you don't have to assume it. We can just, you know, do a new policy.
So how does that work too? Especially since you're independent. So the policy, do you have someone, an insurance company that they'll just sign, like pretty much take over that number?
So the way it works is because flood is regulated by the federal government, it doesn't matter. FEMA, it doesn't matter what carrier you're with.
Okay.
It's all the same.
Okay,
so
got it.
If the seller has a flood policy with Allstate and they come to us, certainly since we represent Allstate as well, we could write it there as well. But we can write it with Bankers, we can write it with Wright Flood, we can write it with, you know, National General, we can write it with whoever is a FEMA flood carrier, and it's all the same. So it doesn't have to be, say, you know, if somebody asked me the other day actually, well, the seller's flood policy is with USAA. Well, we don't write with USAA because they're a captive market, and their question was, can we use you as the, you know, for the flood? And I said, yes. It doesn't have to be with USAA. We're going to rewrite it with one of our FEMA flood carriers, and it's going to be exactly the same. So
okay, that makes sense.
Yeah.
Oh, well, you know what? Then we need to debunk the Citizens hoopla that's going on right now, where some people are thinking, at least I've heard and I've had some people say, well, if you have Citizens, you need to get flood right away.
Yeah.
And that's not how I was reading it, but then speaking to you, you explained it wonderfully. So.
Because I understood it.
Yeah, we not that we weren't having a debate, but I was like, that's not how I'm reading it. She's like, but that's how I'm reading it. And I'm like, Ashley, help us.
Yeah, so you know, Citizens has become they've taken on a lot more policies, which is that they're the state-run public insurance carrier. And so starting in April of 2023, if you were buying a new policy with Citizens and it included wind coverage, you were then you were in what's called a special hazard zone for flood. So a special hazard zone for a flood is any type of higher risk flood zone. So either an AE zone, an AH zone, or something in a V zone.
That's velocity, right?
Yeah, it would be. Yeah, they're all just different.
Okay.
Flood zones, they're more VE is basically right on the coast.
Got it.
So, if you're in one of those special hazard zones, you were then going to be required to carry either matching flood limits for your building and contents with your home insurance, or at least the maximum that you can get with FEMA, which is $250,000 for the building and $100,000 for the contents. So that started for new policies April 2023 in hazard zones. If you are in a preferred zone, like you're in an X zone, preferred, you were not required to carry flood insurance if you had a Citizens policy.
Okay.
So that would not be a requirement for you as of the April 1st, 2023. Starting in July, anybody that was renewing with Citizens that was in a special hazard zone also had to then have flood insurance with the matching limits. So if you had a flood policy that only had building coverage, then you needed to add contents coverage to the policy, which obviously is an additional cost. Or if you didn't have a flood policy at all, if you wanted to stay with Citizens, you then had to purchase a flood policy. And so that's been happening for, since July as far as the renewals, and then April as of new business. Starting in 2024, so in January of next year, if you have a policy with Citizens and your dwelling coverage is 600,000 or above, regardless of flood zone. So even if you're in an X zone, you're not required to carry flood insurance for your mortgage. It's a preferred zone. If you have coverage 600,000 and above, you're going to have to carry a flood policy if you want to keep your policy with Citizens.
Okay.
And then in 2025, it's anybody that's 500,000 coverage and above, and 2026, 400,000 and above, and then in 2027, anyone that has a policy with Citizens is going to be required to carry a flood policy.
Yeah. Do you foresee other carriers going this route as well?
There's already certain carriers that require flood insurance if you're in a special hazard zone, but in the private market, if you're in a preferred zone, no.
Okay.
Yeah, and I don't see that going in that direction. This is more of Citizens should be a carrier of kind of last resort, and they have a lot of policies on the books right now, and this will deter some people from placing their policy with Citizens. And I think that we're headed in the right direction in the private market. So a lot of those policies that are maybe in those X zones or those preferred zones, we're going to see them being taken out by private market carriers. We're already starting to see that. So we're starting to see carriers like that have been around for a long time, Florida Peninsula. We're starting to see Slide. They're actually taking out policies from Citizens. So what that means is you have a policy with Citizens, they're offering you a private market option that is, close to what your Citizens rate is, and you may or may not have to carry that flood insurance anymore.
Okay.
So yeah, and we're starting to see new carriers come to the market.
Ooh, that's exciting.
Yeah, so
you have a new carrier that you were just telling me about with new builds that's like phenomenal, right?
Yeah, they've been around for a long time, but
okay. I don't know, it was new to me.
Yeah. Yeah, so that's American Integrity. They're awesome with new construction, but we have new carriers that just opened back up, are opening, like Loggerhead. So some of these names will be unfamiliar to people because they're just coming to the state of Florida. But that's the way that.
Why
are you doing that?
Yeah.
Ooh.
Yeah.
Give Florida a shot.
Well, they're doing that because the legislation that was passed last December is moving the insurance market in the right direction.
Okay, so they're feeling more confident.
Correct, and we're going to start seeing reinsurance carriers open back up or come back to the state because these new legislative changes say, it's illegal to do the assignment of benefits. You can't do that anymore. It's illegal for roofers to knock on doors. There's not an attorney multiplier anymore when it comes to insurance claims. So a lot of these things that needed to happen are now in place. And so insurance companies are feeling more confident about coming either back to the market and opening back up, because a lot of them have been closed and, for several, we have a couple carriers that have been closed for several years for writing new business in Southwest Florida because of what has happened. So we're going to start seeing them. Yeah, we're going to start seeing them open up more capacity. We're going to see new carriers come in and be competitive, which will help stabilize rates in the market. So I think we're headed in the right direction. I'm super optimistic about it. And it's been a tough couple of years in the insurance market, but I think we're headed in the right direction.
Do you think too that will help as far as like if you're in a special flood zone or special hazard zone, will that help decrease any of the flood costs? Like I pulled a property the other day, I had a buyer interested in it, and it was he wanted to use it as a vacation rental. And it was not on the water, but it was an AE zone. And on the MLS, you can just click there's a little water drop just to get an estimate on what flood would be, and it was $18,000. Like,
yeah,
that's
probably
just
not realistic, but that's probably
like there was one that was like 12 and one that was up to 18, but it's like immediately, you know, and obviously that's just what, because it had like you know, public and private flood policies on there, but for me it's like, you know, that's almost impossible for anyone.
Yeah, that
that's
doesn't
just
make
a
sense.
normal everyday person.
Right. Yeah.
Right. And that definitely doesn't make sense for somebody that's buying a house that's going to be living there. Now, certainly there's people out there that are buying, you know, vacation rentals that they're making $10,000 a week. So, I mean, that pays for the flood policy in 1 week.
Yeah,
so, I mean, maybe that may, you know, that may not deter the investor, right? Over
especially if they're paying cash.
Right. But certainly your everyday primary home buyer, that's certainly going to deter them. I know
like
that
people, like more carriers coming in, that it might help bring those costs down, or is this going to be the standard?
I don't see us seeing a huge influx of new private flood carriers.
Okay.
But I do think that, well, my hope is that we'll see some of this FEMA 2.0 is going to start to maybe be challenged at the legislative level. I know that here in Florida, it's already started to be challenged because it has started to hinder the real estate market in general here. So I see that being a bigger deal once we start seeing these more and more 18% increases. And, you know, it's not, some of those homes in flood zones are not affordable to
consumer.
Correct. Yeah. So I'm hopeful that we'll see some reform on the FEMA 2.0, but that's going to take some time. And it's not going to happen anytime soon. But you know, I think I was telling Alex that, you know, if you're grandfathering a flood policy and it's $1,200 today, and we get to a point where, all right, next year it's $5,000 or $6,000, you know, when you're with an independent agent, they can certainly reshop in the private flood market as well. So at some point, the private flood market may be less expensive than the FEMA market, and then people will switch over to that. But, you know, that's all kind of up in the air with the way that the weather goes. And obviously Ian was a 100-year flood storm that nobody anticipated. And then the last hurricane that just came through, you know, there was some major flooding up in that area. So we're seeing more and more flood claims associated with hurricanes than we have in the past, which then, you know, doesn't necessarily change FEMA's rates, but it certainly does the private market.
Okay.
They either decide, hey, we don't want to write in these coastal areas anymore, or we're just going to raise the premiums. You know, to
cover their butts.
Right.
So. And I know too, another topic, but I know it's big for Florida. Like I had reached out to you for a short-term rental insurance quote.
Yeah.
And that was, I think it was like $9,000 a year.
Yeah.
Like, is that the new norm? Like a lot of insurance companies are not wanting to write for vacation.
Right. So short-term rental in general is a limited market. And then when you start adding, okay, I want to do it nightly, or I want to do it weekly, right? Less than 30 days. And I want to do it numerous times a year.
Like an Airbnb. Basically.
Right. There's very few carriers that allow for that type of risk, you know, to be written. And then we're already in a limited market. So you have people that I want to do short-term rental, and that's okay, fine. We have markets for that. But now let's take a look at what is the age of the home. Okay, well, the age of the home bumps you out of, if there's 5 carriers, the age of the home bumps you out of 3 of them because they don't take homes over this age. Okay, and then the 2 that are left, what age is your roof? Well, that bumps you out of this one, or bumps you out of all of them, or it bumps you out of only one option, and it's $9,000. So it's a combination of a lot of factors that if you're going to do short-term rental, pick a house that has, say, a newer roof, or maybe is newer construction, or so it's a lot of factors that go in. And when you're already starting in a limited market, then everything else has to kind of be perfect for it to be, affordable. So
did you guys hear? I read this on Instagram, so forgive me.
I can't wait.
I read it on Instagram.
Alex is getting her insurance information from Instagram.
No. It wasn't actually about. It was about short-term rentals, actually. And I was reading that there are some states that are actually cracking down on short-term rentals, such as Airbnbs, things like that, because they're saying that it's affecting the livelihoods of the people that are living in those neighborhoods.
Yeah, because it's raising the rent prices.
And they're going to start cracking down. And I'm like, people literally have built their lives off of Airbnbs and short-term rentals.
Yeah, they've there's been a lot of, and even in different cities, requiring licenses, and then they only allow for so many licenses to, I think Marco Island is maybe moving towards limiting their short-term rentals less than 30 days.
Cape Coral is as well.
Yeah, so I know that there's some, there's definitely some talk or things happening in certain cities that where they don't want the weekly or nightly
It's saturated
rentals.
too. I mean, I bought my home with the mother-in-law suite out back specifically for vacation rentals, so it changes everything for me.
Yeah.
I mean, luckily it's on my property, so it's one mortgage, but the people, I had a friend's father called me a couple weeks ago, and he bought a vacation rental because he doesn't have retirement. He's like, this will be my retirement. He took out his wife's 401k and bought this property
in cash,
and now he doesn't have. They're like, we're not able to rent because it's so saturated in Cape Coral, so they're not able to get it.
There's too many options.
Too many options, like every corner. So then he's like, I can go towards. Okay, excuse me, no, he didn't take out cash, but took out the down payment because he's like, I could go towards doing annual, but I will literally maybe break even with the mortgage and lawn and all pool care and all of that. But it's like, I felt so bad because I'm like, like we can look into selling it, but like there's if you're relying on and the vacation money or whatever to pay that mortgage, it's nuts. It's very difficult, so and I know Cape Coral is starting to crack down on the short term, just because neighbors are getting mad too, like just the influx of people in and out and having parties and stuff like that. So it's just become a nuisance. And then too, it's just, Cape Coral is pretty much deed restricted anyway. So it's just, but.
And even in the condo market where they used to allow that, a lot of the condo associations are, a lot of them are moving towards, you can't rent your condo for the first year that you own it. And then when you do rent it, it has to be annual, or it can only be one time a year, minimum 3 months. So we've had a lot of people talking to us about that too. So I think it is to, I guess, avoid having so many different people come into developments or the area.
And I've understood that as well, because they don't want it to be like a hotel. Like people are paying to be in these condos and paying HOA fees for a reason. Like we don't want it to be like hotel stays. Right. In and out. And then too, it's security for people. Knowing that there's people, you don't know who your neighbor is or who the next person's going to be in. And you buy condos, a lot of times people do it because it may be seasonal or whatever, and it's a security to know, like, I can lock up and leave, and I'm okay, But
there's a lot going on.
It's crazy.
Oh man, I learned so much today. Thank you.
You're welcome. Thanks for having me.
One more question too, because I had someone. We had an office meeting yesterday, and we were talking insurance and all that. And someone mentioned an umbrella policy. Is there something that you can do as far as like, for example, like if my rental's on my property? Is there some way to do an umbrella policy with your homeowner's insurance or something? Or I guess I don't understand an umbrella policy.
Yeah, so an umbrella policy is additional liability insurance that you can have over the top of your underlying policies. So you can, on an umbrella, you can include several things that you have insured. So typically an umbrella policy would have your primary residence. And the way it works is on your underlying policy, so you have your policy with slide, and on that policy you have liability coverage. And you have to have a certain amount of liability coverage to be eligible for an umbrella. So most carriers, it's either 300,000 or 500,000, just depending on the carrier for the umbrella. So in your case, you probably have 300,000. So then, say you had something happen and somebody slipped and fell, or then they bring a lawsuit on, and they've exhausted the limit, the liability limit on your slide policy. Say they've that money has been paid out, but they have additional damages. If you had an umbrella policy, it would be an additional umbrella of liability.
That makes sense.
And it typically starts at an additional $1 million, and then you can go up from there depending on what you need. So as your assets grow, the more liability insurance you should have. So an umbrella policy typically covers your primary residence, and then if you have the underlying auto insurance liability coverage, then you can include your automobiles on there.
Okay, makes sense.
If you have rental properties, again, as long as you have the correct underlying coverage, you can add that to your umbrella. So same thing if you have a boat, it's just dependent on, are you carrying the correct coverages on these underlying policies to be eligible for the umbrella.
All right, that makes sense. Yeah, that came up yesterday, and I was like, I don't understand that at
and
all.
You typically can, with a lot of carriers, you can bundle your umbrella with your auto insurance. And if you can't, then there's standalone options. There's a few home carriers that have an umbrella option, but it's typically bundled with your auto.
Got it. Interesting.
Yeah.
Cool.
So.
Well, that's a lot. Like, brain hurts. I feel like insurance is just one of those things where it's like,
we needed Ashley here.
I would say the most important thing is to find an agent that you trust, that is going to give you good information, that's not trying to just sell you a policy, that's going to walk you through it, explain to you what the coverages are, explain to you why your premium may be higher. Okay, well, it's because the roof is this age. If you replace the roof, this is what it looks like. Or even, you've seen a wind mitigation report. It tells us how the roof is connected to the home. A good agent doesn't just look at that and send a quote and not advise on what sort of things could be more advantageous for the client to do. So we get a wind mitigation report. If it doesn't have a favorable credit on there, we let the client know, hey, based on this wind mitigation report, you have, it's going to be a funny word, but you have toenails, right? That's one of the roof to wall attachments. If you get what's called the third nail put in and it changes it from toenails to clips, it may cost you $800 to $1,000 to get that done, but it's going to save you $2,000 a year on your home insurance.
That's awesome. Right.
So, that's the importance of just finding a good agent that is not just trying to, send out quotes and work fast, but they're taking into consideration what's best for the client. A good agent tells the client, hey, just so you know, the full risk premium on this flood, even though it's $1,200, it's going to be $6,500 in a couple of years. I want you to be aware of that. So same thing with lender and real estate agent. It's just advising your clients of, hey, these are the things you need to be looking at and aware of and okay with, moving forward.
Absolutely. No, I agree. Like, sometimes you just have to spell it out,
even
if it's not the greatest news, but you're like, listen, this is what it looks like, and these are our options. Like, inspection period's up here. I just had that conversation today. These are your options. If you don't like the money you need to bring to closing, we can walk today, but mind you, like, remember that, like, we need to walk today.
And that's the thing that sucks is, like, some mortgage brokers or realtors, not us, but some, well, they just want to get the deal done. They just want to have the sale and have the money in their pocket. Like me, I'm like, great, like, let's lay down the financial aspect of it. Are you comfortable with? That's why I do everything, before the due diligence period's over, because I want to make sure that you're comfortable and we're not getting to closing and you're like, why the heck did I just do this? And now I'm going to be married to my house because I can't do anything else. So
right.
And then down the road, 2 years, it's like they're cursing you because you didn't inform them.
And that's one of the things that I think we all do a really good job at. We care about our clients more. They're not just a number.
Right. It's not just a deal done.
It's like they're people that we care about and we want to be able to advise them well. Right. Even if we have to have hard conversations about a home that they fell in love with. Listen, this is what it is.
Yeah.
If you're okay with that, good. We're going to support you through the transaction, but we need you to know.
Yeah. And I think too, it's for you as an insurance agent, if one of your clients were to reach out, hey, can you run this, flood policy for my client, and they're not under contract yet or anything, is that a pain in the butt for you to do?
No, it's really pretty simple. For us, we do that a lot.
I would say 95% of my clients, and she does the quotes, and they end up using her. Anyway.
Yeah. Well, I guess too, it's just you're not even under contract yet. Yeah. Sometimes it's I just want to maybe I can afford it, maybe I can't.
Right.
And then if they end up deciding they can't.
We always tell people, give us a call or shoot us an email or a text, and hey, I'm taking a client to go. I just sent one this morning. Taking a client, tomorrow to look at this house. Can you give me some kind of worst case scenario on the home and flood? And so we do, and that way they know going into it. Okay, at the end of the day, if this has no credits or discounts on the reports and the elevation certificate is not good and the seller doesn't have a policy, I know that the insurance total is going to be $5,000 and I'm okay with that. So that way you're not wasting your time and the buyer's time to go look at something that on the back end it's like, I don't want to pay that.
Yeah. Right. Well, and from a lending perspective, we can plug in those numbers she provides and give them their total monthly payment. Yeah. So that way they know, the principal and interest and my HOA fees, and if they have mortgage insurance, everything all together is X, Yeah. So, and I mean, that's deterred a lot of people, in my opinion, with certain properties that they were gung-ho about. Then they're like, that's way too expensive.
Yeah. I hate this house now.
Yeah, exactly.
Nothing about it I like.
Yeah. Goodbye. Oh, thank you.
I didn't even like it when we drove up.
You're like, ow, gross.
Can't even see myself in this anymore.
You only talked about it for 3 weeks.
Right. Right. Yeah, we hate that. We know. We'll find a new one for you.
Man, well, that was good info.
That was amazing. Thank you so much for coming.
Oh, you're welcome. Thanks for having me.
No, you're welcome anytime.
I know it was not as funny as your normal stuff, but
honestly, it's the first couple minutes we try to be funny, and then we get serious.
And then I'm like, maybe people just want funny though. Maybe we're doing it wrong. I don't know.
I should have come with some insurance jokes, at least one, like a knock joke.
I don't know about that.
No, we might have to do another one.
All right, fine. We'll let her. We'll just come and do it.
We'll do I'll do a video blooper, and you can insert it into the next podcast.
I love that. All right.
I'm sorry I didn't come prepared.
I think it was great. But now I want insurance jokes. It was good before you mentioned it.
She's like, we'll have to do this. Trash.
Fail.
Get rid of it.
Cool. Well, how can people reach you?
Oh, yeah, that's important.
Yeah. Our offices are located in Bonita Springs off of 41, but our office phone number is 239-317-7160. And you can reach me via email at ashley@sunriseinsurancegroup.com.
Perfect.
Yeah.
All right. Well, perfect. I think that was very good and very informative.
Yeah. Thank you.
Thank you.
Yeah, thank you.
You guys are awesome. Use them.
Spirit fingers.
All right. And again, I'm Gibby Eagle with Maxim Realtors.
Alexandra King, NRL Mortgage.
Yep. And we'll have all of our contact info either at the end of the video if you're looking on YouTube. Spotify, you can't see the
No.
Yep. And we'll soon be up on Apple and all that kind of stuff. So.
Yeah, Anyway.
All right. Big things.
Thank you guys. We'll see you next week.
Yes.
2 weeks. Sorry. I don't know what I'm saying. Goodbye.
Bye, guys.